Hi guys, Anton here, and welcome to this episode of Car Chat. I'm on my way to Melkbos Strand to have a workshop with my attorney. We've been doing so many deals in Empire Wealth Property Group lately that I decided to set up a legal services firm and bring all our legal work in-house. But this episode is about home loans. So there's some breaking news that I wanted to share with you quickly. Standard Bank has just announced that they will provide 105% home loans to first-time buyers up to a purchase price of 1.8 million rand. And I'm pretty sure that's in response to Nedbank's recent campaign where they will give 100% home loans up to 5 million rand, which Standard Bank will now also do. And FNB also recently announced that their affordable housing product, in other words, I think it's a combined or single income of up to 25,000 rand per month. To qualify for that product, they'll give home loans of 110%. So the banks are obviously fighting a bit at the moment for home loan business, which is not surprising given the current economic climate. Now, as an investor, you should obviously know we're currently in a buyer's market. And with the slow economy at the moment and the slow growth in property values, it creates the opportunity for us to buy properties below market value. And where I'm personally focusing my energy at the moment is to densify properties. In other words, for example, I'm doing student accommodation where I'm building a student accommodation fund. And if you're starting off investing in property, or even if you've invested in property for a while now, home loan finance is one of the best ways to build your portfolio, because the main concept is that you should buy investment property that you can rent out. In other words, if it's a buy-to-let strategy where your tenant is actually paying your property costs, which includes your bond repayment as well. Now, if you can get a 15% gross yield on the property, then that would typically mean that you are cash flow positive. Or if you have some money lying around and you put down a deposit, let's say maybe a 5 or 10% deposit, and the property is yielding about 12 or 10% gross, then you're still cash flow positive, right? So the point of cash flow positive will determine what amount of deposit you put down, if any. But once again, the concept is that the tenant pays all the property costs and you get the upside. So if the property appreciates in value annually, Cape Town, for example, is doing about 10 to 12% per annum at the moment. Gauteng is around 6%. Northern Cape 21% per year, which is very interesting. But then your wealth grows annually, and your equity in your property grows annually as well. Also, your rental income escalates annually. The current escalation rate is about 8%. And with inflation sitting at 4.5%, you're actually getting richer every year, because your rent escalates by a higher percentage than what inflation or the cost of goods is at the moment. And that continues for infinity as long as you own or you hold the property. Now, why does Standard Bank give 105% loan? It's a great way to get started or to buy your next property if you're short on cash to pay for the bond and transfer fees, in other words, the acquisition costs. Because if the property is R1 million and you buy and finance it at R1 million, it means that Standard Bank will give you 50,000 rand extra to put towards your bond and transfer fees. So, also remember the transfer duty threshold is 900,000 rand, but I think between 900,000 and R1 million, it's only like 2,500, 3,000 rand transfer duty, which is not much. Also, that's obviously where the economy or the property market is active at the moment, is the sub-million bracket, where you can easily find a tenant, you can easily resell the property. And because of the high demand for that price bracket, obviously supply and demand, the price or the growth of property in that market is really good. Now, for those of you that don't know, there's actually a lot of ways that you can buy investment property without using your own money. Banks are one of them, right? Because the bank actually finances the deal. And once again, the tenant pays for the costs and you share in the upside. I've recently created a guide which I call the 15 proven ways to invest in property using other people's money. And the bank is only number one on that list. For example, partnerships. I use partnerships to build my student accommodation fund. Venture capital. I use venture capital to do my property developments, and so forth. That's just 3 out of the 15. So I would strongly recommend you get my guide. look at what are the options available for you to invest in property, because let's be honest, if you only use home loan finance, it's going to take a substantial amount of time to really build good wealth and good income streams from property. But there's many property millionaires out there, and I can promise you that they don't only use bank finance or home loans, as we call it. So what I'll do is I'll share a link to get my guide in the below this video, and grab it now and go through it thoroughly. And I think the best way to approach this as well is look at all 15, decide which one you want to use as your main strategy, right? You might not be able to get a home loan right now because of credit, because of affordability. That's fine. Look into partnerships, and where you can actually maybe put sweat equity into finding a property, unlocking its value, and you get someone else to come in as a partner to either stand surety for a bond or to put in capital, or a combination of the two. But my biggest advice is inform and educate yourself around what is possible, that what is available to you, to other people's money, to build your property portfolio. Grab it at the link below, and I hope you've got a fantastic day and a fantastic weekend, and see you in the next Car Chat. Bye bye.